reasonably strong numbers, right?
Yeah, we definitely needed some good news. Housing starts have been up 8-9% over the past couple of months. But if you look in the longer term perspective, we're still only building single-family homes at the rates we built in the 1960s. So still way down in the longer perspective.
So exactly, how much of this is multifamily?
So multifamily kind of have been up. They dropped a little bit in 2017, back up in 2018. That actually has been a surprising point this past year. Multifamily housing starts are at historical highs.
And what drives that?
So there has been a lot of investment in multifamily kind of living and apartment construction. If you look at the three different data series in this report, kind of multifamily starts, mid-density, 2 to 4 unit starts, and single-family starts, there are really three very contrasting stories. Multifamily apartment starts at historical highs, single-family starts edging slightly higher, but still kind of near historic lows, and mid-density starts essentially flat, going nowhere.
So we've lost our capacity at that mid-density point.
That's right. We're seeing kind of these density debates in many Western cities, and that mid-density is a key point that we're missing.
What about affordability, though? If you look at FICO scores, at LTVs at this moment, if you compare them back where we were pre-crisis, how are we doing on that metric?
So the lending standards are certainly tighter than they were in 2005. That said, if you look kind of where we were in, say, 2000, 1999, 1998, if you have a high income, a good credit score, it is relatively easy to get a loan. Those people with low credit scores, difficult to document incomes, they are still having trouble getting a loan.
Because this is the question, isn't it? At what point do rising interest rates in the United States and rising mortgage rates actually bite? And
that, for me, at least, is a bit of a puzzle. I'll put a chart up here, actually, that shows mortgage rates versus applications, and basically, they're both up. And normally, I would think that they would be in reverse order. And so what's going on? Why is it that people are still applying even as the mortgage rates go up?
Well, when you think about what drives people to buy a home, particularly the first-time young adult home buyer that's been driving the market over the past couple of years, they're motivated by big life decisions. 10, 15 basis point movement in mortgage rates is not going to shift their buying plans. Millennials are getting to the point where they're having kids, deciding, looking at school districts. They're buying regardless of these small movements in rates. Where it does matter is maybe on their price point.